You're watching Mining Headlines on mining.com. Here's a glance at some of the stories dominating headlines. I'm Devin Murrigan. Well, gold prices have hit their highest levels since October. Analysts say the lack of clarity around U.S. President Donald Trump's policy plans has sparked fears of market volatility, boosting the appeal of safe haven assets like gold. Now, spot gold rose to $2,757.10 an ounce at midday on Wednesday in New York. Trump has also expanded his tariff threats to include China, the European Union, Canada, and Mexico, raising concerns about inflation. Economists warn that inflation could limit the Federal Reserve's ability to lower interest rates further, which would typically weigh on gold as it doesn't pay interest. Well, last year, gold set records due to interest rate cuts, geopolitical tensions, and central bank buying. Analysts say Donald Trump's rollback of electric vehicle targets is unlikely to dent the mining industry as global demand for EVs continue to surge. While Trump's decision to revoke Joe Biden's goal for half of all new U.S. cars to be electric by 2030 caused shares of automakers and lithium producers to slip, experts believe the EV momentum outside the U.S. will offset any slowdown. Australian lithium producer Liontown Resources says the global shift to EVs is well underway, regardless of U.S. policies. Australian analyst firm Barrenjoey says while fewer subsidies might temporarily cool demand, the transition to EVs remains unstoppable. Chile is launching a plan to extract cobalt and rare earths from mining waste. Development agency CORFOR will invest up to $4 million per project over 3 years to drive innovation. With nearly 800 tailing sites, Chile aims to tap their untapped value. Well, that's the word from Mining Minister Aurora Williams. Critical minerals power EV batteries and renewable energy with global demand on the rise. Proposals are open until March as Chile pushes to lead the energy transition. The plan boosts sustainability while capitalizing on the country's resource wealth. Canada's largest diversified miner, Teck Resources, plans to invest up to $3.9 billion over the next 4 years to boost its copper production. It wants production at about 800,000 tons annually by 2030. Now, in 2024, the company achieved a 50% increase in copper production, driven by its Quebrada Blanca mine in Chile. Teck expects production to rise further this year, reaching up to 565,000 tons. Quebrada Blanca, where Teck holds 60% stake, remains central to this growth. Indonesia is set to enforce a new policy requiring commodity firms to keep their export earnings onshore for at least a year, and that starts on March the 1st. The move aims to boost Indonesia's foreign exchange reserves and support the weakening rupiah. Currently, exporters must retain 30% of proceeds in Indonesia for at least 3 months. The extended requirement has raised concerns among businesses who fear cash flow disruptions and increased borrowing needs. Now, David Samuel, chief economist at Bank Central Asia, warned that a sudden move could impact businesses' ability to manage finances. The Indonesian rupiah has weakened more than 7% since the end of September, despite central bank interventions. And that's where we leave the mining.com headlines for now. Bye-bye.